Everyone's talking oil again, and we're right near the one of only two refineries in Australia, and oil's typically being sold there at the moment for $100 Australian a barrel, including handling and lifting costs. So the economics are extremely attractive. So it's really simple, and you've got to keep your message to investors that way.
Hello, you're watching Proactive. I'm joined by Kane Marshall, the Managing Director of Australian Oil Co. Kane, very good to meet you. For investors new to the company, how would you describe your strategy and what differentiates your approach to underexplored oil and gas assets in the US and Australia?
Well, what I'd say to that is that firstly, we're really the only listed company in Australia with a presence on the west coast of North America. We've got an established market, was the fifth largest economy in the world, still one of the hungriest economies in the world, and obviously there's a lot of regulatory changes which are a tailwind for our exploration and development activities there. And we're now broadened that position to Australia, which is exactly what we've said to shareholders we'd do. So, under promise, over deliver, as they say. They're the pillars of what's driving us in the next 12 months. That's what we said we're going to do. We've diversified the portfolio. Both jurisdictions are hungry for gas, either data center or domestic gas markets in the United States, and everybody is well aware of the challenges on the eastern coast of Australia and the gas supply issues there.
Well, maybe starting off with the west coast of the US, you've just increased your working interest in the Sacramento Basin with no cash outlay. What strategic advantages does this consolidation give you, particularly with recent regulatory changes and shifting gas demand in California?
Well, you sort of can dictate our own terms, so to speak. You don't always have alignment in joint ventures. We see value there. We've just seen recently the Berry and CRC merger, two massive independents in the US have merged primarily around their Californian interests. So we see, particularly with Mountain Pass and the critical rare earth story everybody's well familiar with, that part of the US is going to be hungry for gas. And everyone's talking AI and data centers. Well, you need the energy for it, and you've got to be positioned to capture that. So that's principally where we are right now in terms of our position in the United States. We see other aggregating up opportunities, other acreage that we can get reasonably well in terms of our remit of our capital spending. And we traditionally have executed programs there that are high impact, and now it's just about diversifying that mix of assets into other jurisdictions.
Moving to a transaction you've just completed in Queensland, that's the Surat Basin package, and it includes producing fields, drill-ready prospects, and a key pipeline infrastructure. What attracts you to these assets, and what near-term production or development gains do you see?
A number of factors. One, we've gone to an area of the Surat Basin that has really had not much exploration for a long period of time. We've acquired assets that got existing discoveries. We've acquired assets that got existing seismic, particularly Riverslea that's covered in 3D. We've acquired assets that have got infrastructure, and we've acquired assets with environmental bonds in place. So it's also right next to Silver Springs gas plant, which is hungry for gas. I think it's got another 8 terajoules a day of capacity. And there's a direct entry into markets of double-digit gas price. So that's a no-brainer. I think it was opportunistic. The assets have fallen through the arms of a number of companies. No value really added there by those operators. We've been working on a number of opportunities for a significant period of time. And we also have an exposure to the oil story. Everyone's talking oil again, and we're right near the one of only two refineries in Australia. And oil's typically being sold there at the moment for $100 Australian a barrel, including handling and lifting costs. So the economics are extremely attractive. So it's really simple, and you've got to keep your message to investors that way.
Kane, with assets now in both the US and Australia, how are you prioritizing capital and work programs? Where should investors expect to see activity and potential catalysts as we head into 2026?
Well, I think the market wants to see what you're going to, firstly, have you delivered on what you've told everybody? And that's what we've done. And then what does that translate to in terms of activity, and what's the most high impact project for getting a stock to move. It's not rocket science. So I think in the first instance, our main undertaking for our listing is California. We've consolidated that position now, making it a lot easier to, rein in some more costs, bring in more exploration acreage, look at those bigger things to drill. So you'll see a little bit of that, but I think also over the next few months, there's going to be a bit of a focus on what our exploration work in these new assets. What does it look like? What are the drillable prospects? How are you going to increase production? And that's going to be an evolving story. This is early. There's a lot of work to be done. There's other operators in the area. The big boys are there. Shell, Santos, Elixir and Omega have just done some corporate transactions. So we're right in that. That's where I think we'll put a lot of concentration in terms of news, but on-ground activity is probably going to be a bit of a mix of both.
And I hope you'll keep us updated on your progress with that. Thank you very much for the introduction today.
You're welcome. Great. Thanks for having us.
Very welcome. Kane Marshall, Managing Director of Australian Oil Co.